Hello, folks. Brandon Chapman with you. It's a Monday video for TheoTrade. It is April 14th, and it's a holiday shortened week with Good Friday market closure on Friday. We've got four days for things to go on. And boy, as I'm looking at the market today, and the S&P is up 1.3%. Maybe a significant tweet over the weekend regarding Apple, which was up 4%, 3.69% right now. Earnings coming up there, but it's just a quiet day in the midst of a very volatile market over the last couple of weeks, as we've seen significant downside pressure. And obviously, this has been a day, a week or a month in history in terms of just the amount of volatility, selling, and uncertainty out there with all of the news regarding tariffs and other policy changes. Even how the Fed is adapting to the current market. They're not exactly stepping in, wanting to cut rates or talk about it. It just seems like we're just in the mode of trying to figure out what's the future earnings of the S&P 500 if they're going to pay tariffs, right? If Apple's going to have to pay more on their phones, then all of a sudden yesterday, okay, that's out. They're not going to have to pay tariffs for at least for the time being. Then you got Lutnick out there saying, okay, well, yeah, we've suspended tariffs on semiconductors. We got something coming out in a month or two. How do you price anything right now? This is just reflective of the uncertainty, right? Nobody knows what earnings are going to be a year down the road. Okay. What is the impact on policy and tariffs? We just don't know. We don't even know what the tariffs are going to be, right? It's changing. It's fluid. I get it. The idea that we're taking kind of a shock and awe, a stance. We're trying to kind of disorient the current order of manufacturing and shift it more westward away from China. We're trying to get countries that are probably natural partners with us anyway in Asia, like Vietnam, for example, or Taiwan, and having them look towards the United States as a means. And I was talking with my son last night, who's in Taiwan, and he was asking me about tariffs. And look, I mean, people are scared, right? They're kind of afraid. Oh, they're going to take away all their manufacturing base. TSMC, that's a big deal, right? If they come to the United States, and they're worried, right? But the idea is that how is this all going to play out? What's the final result going to be? The point is nobody knows. So this is a trade war, right? And right now, all is quiet on the bearish front. We're kind of in the eye of the storm today. And if you guys are familiar with the film All Quiet on the Rest of Western Front, or the autobiographical novel written about World War I, it was written for the perspective of the Germans. So if you're a bull looking at the market right now, wondering about the bears, you're saying, man, today is quiet as things are going higher. But what's leading the way? Staples, utilities, real estate. I mean, those are more interest rate sensitive parts of the market. Are bonds rallying today? TLT, for example, we're up about 0.77%, a little lift off the lows here. All right, not bad. Maybe this is indicative of the idea that bonds may go higher, because what we're not seeing today is a bond crisis. The basis trade isn't blowing up. We're not seeing foreign selling of our debt. Maybe some of that debt parked in places like Luxembourg or other small countries that are maybe housing those bonds that maybe China or other countries have bought, and maybe they're out of those bonds right now. Maybe that limits some of the selling that can trigger an unwinding of the basis trade. Those in the basis trade are basically borrowing money and buying treasuries and selling futures, trying to make the difference. But they've got to roll that debt over every single day. Changes in price matter. And that's really where we saw the volatility enter last week. Have we finally figured out? We are finally seeing kind of a stymieing in some of the bond selling that sparked the unwind of the basis trade? I don't know. I spent some time on that during my session last week on Friday, talking about the bond market, talking about the basis trade, talking about the yen carry trade, US dollar / JPY. I'm outside the Fed. Japan owns the most treasuries of any other developed nation. Right now, the Japanese the Japanese yen is strengthening vis-a-vis the dollar. Is the carry trade unwinding yet, though? I mean, back it out. You'll see there's a lot more room for this carry trade to unwind, just like the basis trade has begun to unwind last week. There is a threat to the bond market. Nobody does know what's going to happen. And that's the problem, right? What we're seeing right now is there's nothing to report from the Western Front. There's nothing to report from equities, right? From the perspective of the bulls towards the bears. This might just be the next setup for another major decline in the coming weeks. But we do know something about bear markets. It doesn't exactly happen all at once, right? The fact that gold's weakening today, again, is indicative of maybe, again, some rotation. it seemed like last week what sparked gold was a rotation from dollar to gold, where this was about tariffs. Gold wasn't tariffed. Now all of a sudden what happened? We saw selling in dollars and buying of gold, selling of treasuries, buying of gold, raising dollars, right? So all this stuff steering towards gold. So today is just one day where everything's quiet, maybe too quiet. I was going through my scan earlier today for my Ghost Prince group. We're trying to find trades and that kind of stuff. And everything is just kind of numb. Earnings are coming up. A lot of stuff happening right now that just says, hey, it's not a bad time to kind of sit back, but keep yourself in your bunker. Don't stick your head up out of the trenches. This is a time to kind of sit back, trade small, if at all. And so again, this is where you just kind of wait it out and look for the next setup in the market. And as we look at things like, for example, volatility coming down, the VIX coming from 60 down to 30, but VIX is still in backwardation. If we look at /VX, again, seeing that the heightened volatility is in the near term, but this is also a time we're expecting volatility to fall in the near future. I'm watching skew. I want to see skew come down. Where do I want to see it? I'd love to see skew down here, 115 and 120. So we're below 130 right now. We ticked higher on Friday. We'll see where we go today with the buying. There's a chance the skew ramps right back up again, in which case we're back into the fight. If we come down, start to approach 120, 115, unusual for a 1.5% update in the VIX, in the S&P, and a VIX decline today, but maybe we can get there. If we can get down here, we're starting to open up the possibility that maybe the war's over. The bulls need to come out. We need to start to trade to the upside. But for right now, we're just seeing a lot of uncertainty, a lot of volatility. And again, we're just waiting to see what can we expect. But again, we may see much lower market yet. But again, like we talked about, the market doesn't move in one direction, the entire bear market. We might see more of a blip up here. We've come off our lows pretty substantially. But this week coming into it with closing around 53.50, expected move is plus or minus 250. So we still got a lot of potential movement remaining for this week. And so again, just expect the unexpected. But today, sit back, take a breather, relax. Again, everything is quiet right now on the bearish front, but that can change tomorrow. Anyway, that's the video for today. We'll catch you back next week. Thank you.